Investing is when you put your money into anything with expectation of achieving a profit.
Your money, when it is sitting idle, it is just a piece of paper. But when you put it into work, when it starts working for you, that is called as investing.
Every wealthy person you know has learned to invest a portion of their income consistently over a long period of time.
Long period of time is the key word in that phrase, and it's very important that people do not see investing as a quick fix, to their financial problems. Rather, to see investing as a sure path to winning with money in the long run.
In this documentary, we will examine why it is important for anyone who desires to be wealthy to invest. And we will also find out how anyone can begin investing today and hopefully retire rich. Investing is a generally complex and tricky subject, with several layers and potential pitfalls that can easily lead to financial ruin. While many have made fortunes investing, many more have lost it all.
The first step that you need to take is that whether I can take a small amount or a big amount of risk. Then go and take help of someone who can coach you, help you, guide you with some information. Today Google is the best friend. You can go there as well. But moving forward, you need to assess your risk and then take one step at a time, a smaller risk and then the larger risk and then the larger risk.
Investing always comes with a measure of risk, but it is not a gamble, like the toss of a pair of dice on the Vegas casino tables.
Investing only really becomes gambling when you invest without fully understanding what you're investing in. So, what takes it away from gambling really is that process of first researching and understanding and knowing that the success or failure of this venture depends on you, not on the toss of a dice.
In spite of the risk associated with investing, it is still a non-negotiable pathway that must be navigated by all who seek to build wealth. But before we proceed to discuss how and what to invest in, here are 5 fundamentals of investing. Investing does not make you rich overnight. It makes you rich over time. Investing is risky. You can make a lot and you can lose a lot. Every investor should know their risk tolerance. Only invest that which you can afford to lose. Finally, only invest in that which you understand. Now, with the fundamentals out of the way, let's dive into what you should be investing in. As I said at the start of the documentary, investing is simply putting your money in anything with the hope of getting a profit. Hence, investing can be as simple as lending a friend money to buy a product he intends to sell so that he can repay you with a profit after sale. To make it more interesting, here is a quick story. Mark intends to sell nose masks online, but needs some money to purchase the masks. So Mark comes to you and you lend him $100 with a promise that he will repay back the $100 with a 10% profit after 1 month. At the end of the month, as agreed, Mark pays you $100 along with the promised 10% profit. This whole story sums up the concept of investing. The $100 you invested is known as capital. The $10 profit you received is known as return on investment. The 1 month it took to get back your capital along with the interest is known as the investment tenure.
Understanding this very basic principle of investing is critical to everything else. And you see, if you don't get this right, you probably don't want to go into the deeper things when it comes to investing, because it's like someone who doesn't understand the fundamentals of construction and of laying a foundation. You don't even want to think about building a skyscraper. There are processes to this. So understanding the fundamentals of investing is critical before you even begin to dabble into the world of investing.
For the sake of this video, we will consider 5 mainstream investments, highlighting some of their pros and cons. Real estate. This is one of the oldest and most popular forms of investments. Real estate is generally stable and considered a valuable asset which can be used as collateral. Real estate is for the most part always in demand, as land is a limited resource and rising population will only keep pushing up demand. Real estate generally requires substantial capital to begin investing, and property requires constant maintenance.
So in different stages of your life, you choose different investing vehicles. They all become a part of your personal financial planning. Like real estate is seen as something which you can back on. Most of your parents would tell us that invest in real estate, that is good. Today we know there are other instruments also. However, real estate is very good if you know that when you need the reward of that real estate investment. If I know that real estate investment, I need the reward in the long term, 5 years, 10 years, 12 years, 15 years time, yes, it's fantastic.
Commodities. This is investing in things like gold, oil, cotton, and so on. This sort of investing is mostly considered stable as they have been around for centuries. However, commodities investing requires good knowledge of the industry, as prices are mostly influenced by regional instability, politics, and general demand for the commodity with changing times and trends.
Gold has been a very good instrument. It is good to park your money, but it's not something wherein you can reap your reward in a very short term. Even in long term, the ups and downs are high in gold. I believe it's more of someone to accumulate in the corner rather than just invest in it. Commodities, not everybody knows how commodity work. So if you are a person who is tech savvy, today everything happens on technology. So and you are also savvy of the information on investment, that's for you.
Stocks and bonds. Stocks give you ownership of a piece of a company, while bonds are like loans given to a company or government entity with the promise of profit on the loan. This is also a very popular form of investing, which requires much lower capital compared to real estate. It is, however, also quite volatile, especially when trading single stocks, as company shares fluctuate based on several factors and variables.
When you are working for yourself and money is also working for yourself, then it is a synergy 1+1. Now imagine that money is being given to someone else to work for you. That is what is stocks and bonds. So that money is invested in another company where several people are working together to ensure that that company does well. And if that does well, you get your reward as a growth in your stock money, as a profit in your stock.
Currencies. This can be split into 2 broad categories of traditional currencies and cryptocurrencies. Traditional currencies are certainly a lot more stable and predictable than cryptocurrencies. However, in both cases, the investor buys and holds either currency in hopes that the value will appreciate with time. This has a low entry barrier to investing, but is also considered high risk.
Currency is not for everybody. Definitely not. One of the reasons, because of the online platforms, it allows you a leverage of 1:many, many times your currency, and the fluctuation there is very small, like it's in $0.07, $0.08. So unless you play big numbers, you will not be able to get it. And it's a complete science. So if you have training, if you have learned, if you have understood why currency goes up and down, and if you keep a lot of track on several incidents happening in world, worldwide. If you are someone who likes to read news and also wants to understand what is the repercussion of the news, then currency is for you.
Startups. This is when you invest money in a new company that you believe has potential to make a lot of money in the future. This is usually done in exchange for equity in the company. The risk here is that most startups fail either due to mismanagement or simply a rejection by the market, hence an inability to turn a profit.
It's the in thing. Now resources are available and cross-country communication is possible. Because of this, startups have come up. I own a startup here, and my startup can earn money from US, from UK, from India, or from anywhere in the world. So that leverage has given startups that kind of confidence which was not available earlier. Everybody who has money wants to invest in them, right? But these are again based on your belief in that idea, your belief in that concept that someone else is going to take it forward.
As we have echoed severally through this documentary, investing involves risk. So, proper research is important before committing funds to any investment pathway. And now that you understand what investing is and what things you can potentially invest in, I imagine the question now is, how can I start investing? The process of investing has changed and become a lot simpler over time, thanks to technology.
I would say difficult process. For every stock that you want to buy, you will have to hold a physical paper with you. You lose the paper, you lose the stock, you lose your money. It started from there. It was like exchange of, instead of exchanging the currency, you're exchanging that piece of paper for the stocks. And if you want to reap the rewards, it was a process, to apply for taking back your money, and there were offices that may not be in every city, so it was a pretty big process. Today, just a click and your money is into the stock and your money is out into your account.
Several applications now exist that make it easy for anybody to invest in pretty much anything, anywhere in the world, and for almost any amount. While these applications have increased accessibility to investment options to everyone, they also come with the danger of making it easy for many to lose money due to lack of sufficient knowledge or information on how the market really works.
For the sake of this video, I have listed some platforms and applications that I have had personal interaction with. And I say again in the strongest terms that this is by no means a recommendation of these platforms. These are just platforms that I have worked with, and of course I would expect anyone to do their due diligence. The whole purpose of the video is to help people understand how they can begin to invest. And I've had this interaction with a lot of people who ask me, you talk a lot about investing, how exactly do we start? What are things I can invest in? And these are some of the platforms I recommend to some of them from time to time and say, check it out, do your research yourself, look at it and see if it's something that would work for you. So these platforms that I will be sharing now are simply for reference purposes.
Some trading platforms that are trending today include Robinhood, Coinbase, eToro. Other platforms that focus on agricultural-based investing and commodities include Farm Crowdy, Sour, Crowdivest.
Great as trading platforms have become in terms of the ease with which people can invest in them, they certainly have the downside of making it easy also for people to lose money, because a lot of people then go on in and invest in things they don't understand, and due to high volatility or market fluctuations, they tend to lose a lot of their hard-earned money. So I think that will be the downside that I see with investment platforms and applications that make it so easy these days to get into the world of investing.
Even though I use some of these platforms, please note that none of the trading platforms mentioned in this documentary are a recommendation, but are mentioned as reference for you to do your research and make the best decision for you. Investing gives you multiple streams of income which make you financially stable. Investing is like planting a seed in order to reap a harvest in the future.
Anything that you want to do in your life, I believe the best way or the best day to do that is today. Pick up your first step. Start scrolling different, information available on Google. In next 5 to 6 days, start assessing the risk that you can take and move forward. We are living in the best times of all times.
Remember this: money saved over time loses value to inflation, but money invested tends to grow. In other words, $100 saved will at best be $100 a year from now, but $100 invested can potentially be $200 or a lot more a year from now. So, start investing today. Even if it is a little, just start.
And there it is today, people. You have once again made it to the end of this video, and big thank you to you. I hope you love the content, and very importantly, I wanted to say a big shout out to everyone who made it amazing for our last video that has now over 400 views. That's large for the channel. And I'm hoping that we will keep topping that number as we keep producing subsequent videos. But very importantly, I just think I hope people are learning from it. I hope you're implementing the lessons we're teaching, and I hope you're getting better, with your finance and with your money. If you do have topics you'd like us to cover, and create documentaries on, please leave that in the comment section below. I'll be happy to look into it and see what I can do with it. And also, I might be starting a new series where we will be spotlighting certain businesses. That's something we're working on in the pipeline, and I think that'll be really exciting to talk to business owners and see how they actually built their brand from the ground up. No holdbacks. We just want the whole truth. That's something I think a lot of people will be interested in, and I look forward to producing the first of that series. As I like to close, stay inspired, people.